Good morning everyone. Welcome to the discussion on banking awareness, second session for History of Banking of India 2 as a part of the PO mains preparation. In this topic we are going to look at the different concepts of banking apart from what we have discussed in History of Banking phase part 1. In History of Banking part 1 we briefly discussed the phases of Indian banking industry, right from pre-independence to pre-nationalization phase. Today we will be starting with the post-nationalization phase, that means the phase of nationalization, how the banks were nationalized, and then we will be looking at the different concepts such as nationalization of banks, banking reforms of 1991 and post-liberalization phase of the Indian economy. So these are the different things that we are going to cover in this session, very important concepts for you. History of banking in India, nationalization of banks, banking reforms of 1991 and post liberalization phase of the banking industry. Alright, so let's start with the first concept to understand what is the meaning of nationalization of banks and when did it happen. So see, banks can be categorized as two types of banks in the country. Right now we talk about banks where the government of India is a major stakeholder, and banks which are owned by private entities. So during this phase of independence, that's right after independence 1947 to 1969, what was happening was some of the key banks were earlier nationalized. For example, SBI was nationalized in 1955, and then IDBI was established in 1964. And when Indira Gandhi became the Prime Minister during 1968, at that time a lot of banks in India were there which were owned by private individuals, right? And the focus of the government of that time under the Prime Ministership of Indira Gandhi was that banks which are private are not taking development to the rural areas, and their primary motive has become to make profit. जो बैंक्स थे वो ज़्यादातर सिर्फ अर्बन एरियाज़ में, शहरों में थे, और छोटे गाँवों में, इवन छोटे शहरों में बैंक की काफ़ी कमी थी, और बैंक जो थे वो सरकार के पॉलिसीज़ के साथ नहीं चल रहे थे, क्योंकि आपको पता है, in India we have this 5-year plans earlier starting from 1951. So the 5-year plans came with certain focus areas, for example focusing on the primary sector of the economy, that is the agriculture sector, and the banks were not very keen or very encouraging in terms of giving loans to the farmers. So that is why the argument given by the central government, primarily by the Prime Minister Indira Gandhi, was that in order to take the development of India towards to all areas of the country, in the towns, cities, towns, and also the villages, and also to focus on the fact that the banks in the country align their goals with the goals of the country itself. Clear? That was also one of the major points. So during this time, the banks, she proposed this, you can say agenda, or you can say propose this plan in the parliament that banks in India should be nationalized, and through this a bill was passed for nationalization in 1969, and later an act was passed in 1970, through which 14 privately owned banks, 14 banks in the country, large banks in the country, which are owned by private persons, private shareholders, were nationalized, and government of India took by, you can say, by force the major shareholding in all of these banks. 14 banks were nationalized, and this is what is called as nationalization of banks. So transferring these shares from private shareholders to making the government of India the major shareholder in a bank. This process of transfer of shares is called as nationalization of banks. Let's quickly read about it. In a historical move, the Indira Gandhi led central government nationalized 14 commercial banks on 19th July 1969. So first important date for you to remember is this date. On 19th July 1969, through the Banking Companies Ordinance. So first it was done through an ordinance in 1969, Acquisition and Transfer of Undertaking Ordinance. Banking Companies Acquisition and Transfer of Undertaking Ordinance in 1969. 14 commercial banks were nationalized. This nationalization was challenged in the Supreme Court, and later what was done, basically, see, in a swift and unprecedented move, all private banks in India with a minimum deposit of rupees 50 crores. There were many private banks in India, but the focus of the government was not on all private banks, rather those banks which are the major banks. So banks, 50 crore rupees at that time was a huge sum of money. So those banks which have minimum deposit of 50 crore, that is again another one question for you. Which banks are nationalized in 1969? All the private banks with a minimum deposit of rupees 50 crore. So दो क्वेश्चन यहाँ पे दिख, तीन क्वेश्चन दिख रहा है हमें यहाँ पे. एक तो ये नेशनलाइजेशन ऑफ बैंक्स फर्स्ट फेज में कब हुआ था? 19 जुलाई 1969. और किस ऑर्डिनेंस के थ्रू हुआ था? बैंकिंग कंपनीज एक्विजिशन एंड ट्रांसफर ऑफ अंडरटेकिंग ऑर्डिनेंस 1969. ये दो क्वेश्चन हो गया. Which banks were nationalized? All private banks with minimum deposit of rupees 50 crores were nationalized. As a result, 14 of India's leading commercial banks, all of these commercial banks are nationalized first through an ordinance which we have already seen here, and later in 1970 through an act with the same name. So ये ordinance जब act बन जाता है कि ordinance एक temporary order होता है parliament का. Once it is passed from both the houses of the parliament and it becomes an act, then the name of the same ordinance or a bill becomes Banking Companies Acquisition and Transfer of Undertaking Acts 1969. Clear? So through an act of parliament, the banks which were nationalized in 1970, earlier in 1969 through an ordinance, and later in 1970 through an act of the parliament, those banks which nationalized through this act are called as nationalized banks. And this is the first phase of nationalization. Nationalization happened in two phases, one in 1969 and then in 1980. So this is also one thing. And one more question from nationalization that we can create is what was done. So the private shareholders, the total compensation given to them was 87.4 crores. Clear? The government paid the private shareholders for whatever stakes they had in the respective banks, some amount of 87.4 crores, right, to the owners of the 14 private banks that were nationalized. So around 4 or 5 questions are there that are based on nationalization in this slide itself. When was banks nationalized? First on 19th July 1969 through an ordinance, Banking Companies Ordinance. Later they were nationalized through the act of the parliament in 1970. What was the condition for nationalization? The commercial bank with minimum deposit of 50 crores. What was the total amount paid as compensation to the owner of the 14 banks? The answer is 87.4 crores. So these are the different things that we can see. Now let's continue. So what happened after nationalization? These are the name of the banks. The 14 banks that were nationalized in 1969 through an ordinance and then later in 1970 through an act. So you see one common thing, all of these banks were basically limited liability companies. So the word limited was there in front of the name of every bank. For example, the Central Bank of India Limited. Two things happened. Post nationalization, the name changed. The was dropped and limited was dropped and the bank became Central Bank of India, and this happened with everything. You see, the Bank of India Limited became Bank of India. Does not mean that the banks now were not limited companies. They were limited liability companies, because limited means what? It means limited liability company, a joint stock company with limited liability. That means shareholders are liable only to the extent of their capital standings. Whatever shareholdings they have, they are liable only for that. If the bank goes bankrupt, they will not be liable for anything more than what is their shareholding, what is their paid up capital in the bank. So today banks don't use the word limited at the end of the name, although it is mandatory to do so under the Indian Companies Act in India 1956 and then Companies Act of India 2013 amended act. It is mandatory that if a company is a limited liability company, then it should add the suffix LTD in the end, but banks don't do that, because putting that limited word at the end of the name of the bank will decrease public confidence in the bank. Okay, so Bank of Baroda Limited became Bank of Baroda. And you see UCO Bank, what is UCO Bank? What does it stand for? United Commercial Bank. So United Commercial Bank, that is a full form of UCO Bank. Canara Bank Limited became Canara Bank. United Bank of India Limited became United Bank of India. Then Dena Bank is there, Syndicate Bank, Union Bank of India, Allahabad Bank, the Indian Bank, the Bank of Maharashtra and the Indian Overseas Bank. All of these are the 14 banks that were nationalized in 1969. These are the 14 banks which had a total deposit of 50 crores or more. Clear? So first thing we have understood about the first phase of nationalization that happened in 1969, when banks with minimum deposit of 50 crores were nationalized through an ordinance in 1969 and then through an act in 1970. A total amount of 87.4 crores was paid to the owner of the 14 private banks. When the banks are nationalized, the new name of the bank dropped the word "the" in the beginning and the word "limited" at the end. Clear? That we have seen now. And we also seen the name of the 14 banks that were nationalized in this phase. Now let's continue with the second phase. So the second round of nationalization happened on April 15, 1980. So that's one question for you now. The second round of nationalization happened in which year? 1980. On which date? Then it will be April 15, 1980. What did happen then? 6 commercial banks. Now what were nationalized and what was the condition this time? Reserves in excess of rupees 200 crores. Earlier it was 50 crores, then after 11 years it was 200 crores were nationalized. Which were the banks nationalized? The 6 banks that were nationalized in the year 1980 are Andhra Bank, then we have Punjab and Sindh Bank, New Bank of India, Vijaya Bank, 5 is Corporation Bank and 6 Oriental Bank of Commerce. Taking the total number of nationalized banks in our country to 20. Here 14 banks that were nationalized in 1969 and 6 banks that were nationalized in 1980. So total कितने हो गए? 14 plus 6, 20. So if today you count how many nationalized banks are there in our country, कितने nationalized banks हमारे country में, the answer होगा 19. क्यों? क्योंकि New Bank of India merged with Punjab National Bank in which year? In 1993. That is also one question that can come. So you can see here number of questions from this slide. Second phase of nationalization happened in which year? 1980. अगर क्वेश्चन आता है डेट के बारे में तो 15th April 1980. What was the condition for nationalizing the banks? Those private banks having reserves in excess of 200 crores. So how many such banks were there in India that time? 6. The names are there on the slide as you can see. Andhra Bank is there, Punjab and Sindh Bank, New Bank of India, Vijaya Bank, Corporation Bank and Oriental Bank of Commerce, taking the total number to 20. But then the New Bank of India merged with Punjab National Bank in 1993, taking the number of nationalized banks in our country to 19, which exists till date. So today also we have 19 nationalized banks in our country. So this is about the, and after the second round of nationalization you can say that the government became the owner of 90% of India's banking industry, right? Now let's see here the difference between, one question that always students get confused with is the difference between public sector banks and nationalized banks. Are both these words same or there is some difference between the words, right? So what do we mean by a public sector bank and what do we mean by a nationalized banks? Are both the words same or there is some difference? Some minor difference is there, and that is what we are going to understand now. So what are public sector banks? Any bank where the government of India is a major shareholder. That means the government of India owns 50% or more shares in the bank, is called a public sector bank, because now the government of India, the government is owned by the public, and then the government owns 50% or more share. That means the public owns 50% or more share in the bank. That is why we call them as public sector banks. Clear? Now what is the meaning of nationalized banks? Nationalized banks are those banks that were nationalized through an act of parliament. First in 1969 and then in 1980. In 1969 through an ordinance, then later it became an act in 1970 and then later in 1980. So in these two phases, those banks, not counting all banks, only those banks that were nationalized in 1969 and 1980 are called as nationalized banks, because they were nationalized through an act of parliament. Whereas all banks in which the government of India is a major shareholder, that is it owns more than 50% of the shares, is called a public sector banks. So we can say that all nationalized banks are public sector banks, but all public sector banks are not nationalized banks. Why do we say this? Because there are two public sector banks. In fact, now we say two, earlier there were many, because earlier we had State Bank of India and state bank subsidiaries and IDBI. Now these State Bank of India, state bank subsidiaries, there were 8 initially, then it became 5. Now there is no subsidiary because all subsidiaries are merged with State Bank of India. So State Bank of India, its subsidiaries and IDBI, these were established before 1969. So you can say that State Bank of India became a public sector bank in 1955 when Government of India through RBI acquired the major shareholding in Imperial Bank of India, all the shares of Imperial Bank of India, and then converted the name of Imperial Bank of India to State Bank of India. So State Bank of India came into origin, you can say, in the year 1955, and then IDBI through an Act of Parliament came into existence in 1964. Both of these became public sector banks before nationalization phase 1 and 2. That is why these two banks, SBI and IDBI, are not counted as nationalized banks but are counted as public sector banks. Okay, so you can see here the reason given to you. SBI is a public sector bank because it was state owned before nationalization. Similarly, IDBI is also a public sector bank and not a nationalized bank, we can say, because it became a state owned bank in 1964 through the IDBI Act of 1964. So you can see here now complete clarity is there that all nationalized banks are public sector banks, but all public sector banks are not nationalized banks. Those public sector banks that became where the government became the major shareholder in 1969 and 1980, and or we can say those banks that were nationalized through an Act of Parliament in 1969 and 1980 are called as nationalized banks. The total number earlier was 20, but now the number of nationalized banks 19. तो ये ओवरऑल समझ लीजिए आप, SBI IDBI जो है वो नेशनलाइजेशन फेज के पहले से ही स्टेट ओन्ड है, इसलिए उनको नेशनलाइज्ड बैंक्स में काउंट नहीं किया जाता है, पर पब्लिक सेक्टर बैंक वो दोनों ही हैं. ठीक है. So totally if I ask you how many public sector banks are there in our country, what is the total number of public sector banks in our country, what will be your answer? There are total of 22 public sector banks in our country, and I will give you an exact breakup of how this is happening, and this is the latest information I am taking based on the fact available as on October 2018. So as of now, as of today, there are total of 22 public sector banks in our country. Now we will see one by one breakup of these things and to understand how did we reach this number of 22. First we will understand that 5 of the state bank subsidiaries, what were they? Bikaner and Jaipur, Mysore, Travancore, Hyderabad and Patiala. 5 of the state bank subsidiaries as well as Bharatiya Mahila Bank. All of these were public sector banks. They all merged with SBI on 1st April 2017. This we have seen earlier also. I have discussed with you in History of Banking session 1. Alright. So 5 of the state bank subsidiaries and the Bharatiya Mahila Bank, so that's 6. All 6 of these were public sector banks, but they all merged with SBI, becoming only one public sector bank. So right now we get on through all of these we get only one public sector bank, and that is SBI. Correct? State Bank of India. Next we will see what happened. Okay, so that's one, State Bank of India is there. Next is the Indian Post Payments Bank. Indian Post Payments Bank. What a payments bank, that I will be discussing separately with you when we go towards more of the advanced concepts on types of banks and other such things. Indian Post Payment Banks. So payments bank first of all is a very new concept, right? These are banks that were started just last 2 years, you can see, and they have certain restrictions in terms of what kind of banking services they can provide, how much deposit they can take from customers. There are some restrictions. For example, Paytm is also a payment bank. Clear? So Indian Post Payment Banks was founded on which date? 1st of September 2018. So that's a very recent question for you, very recent GK for you. So like current affairs on banking. When was Indian Post Payments Bank founded? On 1st of September 2018. Clear? Now what happened on 17th August 2016? So how did it start? IPPB was registered as public limited company under Department of Post with 100% Government of India equity, that is 100% public sector company, for setting up a payments bank. So this license you can say, or it was registered as a payments bank in 2016. Clear? And what is this? Post offices now will work as payment banks also. That's basically what this IPPB is. IPPB, Indian Post Payments Bank. Next, what happened? The pilot project of IPPB was inaugurated on 30th January 2017. That's the next important date for you. On 30th January 2017, at which place? At two places, at Raipur and Ranchi. That's the second question for you. So in fact, there are 2-3 questions already that we have seen here. One is, when was it founded? 1st of September 2018. When was it registered? In the year 2016. And when was the pilot project inaugurated? On 30th January 2017 at Raipur and Ranchi. And finally, in August 2018, the Union Cabinet approved a cost of rupees 1435 crores. That's again one more question. And the first phase nationwide inauguration happened on which date? September 1, 2018. Although the pilot project was launched on 30th January 2017, nationwide inauguration happened on 1st of September 2018. So this gives us one more public sector bank. Please remember, this is the public sector bank because it has 100% Government of India equity. So you can say here that we get one more public sector bank, IPPB. Clear? So first we have seen SBI is one public sector bank merging all associates and Bharatiya Mahila Bank with SBI. And the second public sector bank we get here is Indian Post Payments Bank. Now, total public sector banks, one is State Bank of India is a public sector bank, IDBI is a public sector bank, 19 nationalized banks are also public sector banks, and IPPB, that is Indian Post Payments Bank. So total we have 19 plus 3, there are total of 22 public sector banks in our country. That's very important information for you to understand. Sometimes people say 26, 25, no, understand clearly what are the public sector banks. 19 nationalized banks plus 1 SBI 20 plus 1 IDBI 21 and plus 1, this is not known by most people, this Indian Post Payments Bank is also a public sector bank. Alright, so let's continue now. Let's look at banking reforms 1991. So we're talking about the post liberalization phase. How did banking reforms start in India in 1991? Why did they start? What were the things that were done and what was the impact of these reforms? Right. So now we have moved to the post liberalization phase because banking sector was liberalized in starting 1991. First of all, let's see what was the trigger for reforms. What was going on in the entire phase, like post nationalization, banks became nationalized and banks started opening their branches in all small villages and every small area, small towns, taking banking to everyone. But then there was no profit that was coming. The banking sector was growing at a very modest pace, right? There was most banks were running under losses because when you open so many branches, costs will increase, but you're not making profit from rural areas, small towns and villages. So one major reason was that the banking sector was going through a very bad phase. Indian economy was growing very slowly in the decade 80s to 90s, okay, and there were a lot of problems of foreign exchange and everything. So let's look at one by one all the triggers of growth, triggers for reforms. What led to the reforms of 1991? First was slow economic growth. India was growing at 3%, 4%, which is very less compared to what we are growing today. Even though we have become one of the world's largest economies in the world, we are still growing at 8%. So slow economic growth rate, which is also called as the Hindu rate of growth, because it was so slow, and 3 to 4% with lot of red tapeism, license raj, government control, all of these things pulled down India's growth story. So slow economic growth was one thing. Prevalence of license raj, for everything license was required, lengthy regulatory paper documentation was required, a lot of bribery was there, time used to be, it used to take a lot of time to start something new or change something, clear? So there was a prevalence of license raj, over regulation of public sector banks, under regulation also we can say, over-regulation of public sector banks. Everything the public sector banks did was controlled by the government. Clear? So balance of payment problems was there with India. Current account deficit and currency devaluation was also one of the problems. Gulf War and foreign exchange crisis was one of the major problems. One of the major reasons you can say is Gulf War and the foreign crisis as a result of the Gulf War of 1990-1991. Because India used to purchase most of its oil from Iraq. There was a war between US and Iraq, and because of that war the price of petrol became very high. India imports oil from the Gulf nations, and the cost of petrol being very high, India had to pay a lot of amount to purchase oil, and that resulted in a foreign exchange crisis. Also coupled with the slow economic growth rate and other economic problems in our country, there's a huge problem in the country. You just look at the summary of the problem. In 1991, Government of India had to pledge 67 tons of India's gold to the IMF, International Monetary Foundation, because India had no money. There was no foreign exchange left. The foreign exchange left in India was just barely sufficient to scrape through 3 weeks, right? So India was almost going to get bankrupt. At that time, there was a loan requirement of $2.2 billion from IMF, but IMF said, we'll give you loan if you pledge 67 tons of gold. And that is how this is such an embarrassing moment for our country. $2.2 billion loan from IMF was, India obtained the loan, but there was a problem. It was accompanied by demands from the IMF to liberalize the economy. IMF said that we'll give you the loan, but you will have to open your economy. You have to embrace फ्री ट्रेड पॉलिसी. जब भी IMF किसी को लोन देता है या वर्ल्ड बैंक किसी गरीब कंट्री को लोन देता है तो साथ में एक राइडर भी लगा देता है, साथ में एक कंडीशन भी लगा देता है. आपको लोन चाहिए तो आप ये करिए, हमारे फॉरेन ट्रेड पॉलिसीज को आप एम्ब्रेस करिए, आप WTO का साइन करिए, राइट. So the same thing IMF did that. Okay, if you want the loan from us, we will give you the loan, but you have to embrace neoliberal economic policies, open your trade barriers, remove the trade barriers, and allow private industries to flourish, and also do international trade freely with less restrictions. So what happened in June 1991 when P.V. Narasimha Rao became the Prime Minister? So who was the Prime Minister during this phase? P.V. Narasimha Rao. Before this, when the loan was taken, the PM was Chandrasekhar. Please understand that when loan was taken, the PM was Chandrasekhar. When now the reforms happened under P.V. Narasimha Rao. In June 1991, immediately after coming to power, P.V. Narasimha Rao, the then Prime Minister, and Dr. Manmohan Singh, the Finance Minister under him, set a series of reforms that gradually liberalized India's economy, and we see today the country that we live in, the modern, progressive, fast-paced growth that we see in India because of this liberalized economic policies. Okay. So in August 1991, what happened? See, in June 1991, they took a decision to liberalize the economy. In August 1991, the Narsimham committee was established under the former RBI Governor M. Narsimham to look into all aspects of the financial system in India. The report submitted by the Narsimham committee was the benchmark based on which banking reforms were executed in our country. Narsimham committee ने जांच किया, सभी बैंक्स की हालत को देखी और ये पता लगाया कि इंडिया में जो प्रॉब्लम्स हैं फाइनेंशियल सेक्टर में, बैंकिंग सेक्टर में, उसमें मूल कारण क्या है, व्हाट आर द मेन पॉइंट्स, व्हाट आर द की रीजंस बिहाइंड द plagued industry, the plague that is there in the banking industry. So let's look at the what happened because of the Narsimham committee reports that were submitted. First thing was reduction in SLR. What is SLR? SLR stands for statutory liquidity ratio. This is the amount of money that banks have to keep with themselves all the time to maintain their liquidity so that they can meet the demands of their customers. The banks don't have to keep this with RBI, the banks have to maintain this liquidity always with themselves. So earlier 38.5% during 1992 SLR was 38.5%, means that 38.5% of the total liquidity with the bank cannot touch it, the bank cannot invest it anywhere. The bank has to maintain that liquidity at all points of time. So if 38.5% the banks cannot touch, then they will have less money to invest, less money to give loans and to make profit. How will banking industry grow? And also how will industry grow? Because whenever businesses grow, they have to take loans from banks. How will people take loan from banks to buy cars and homes and other such things? you see the impact that from 1992 to 2018, 26 years later, you can see that now gradually step by step SLR was reduced from 38.5%, now it has become 19.5%. It is still higher compared to other developed countries, but in India, this is what the RBI believes is required to keep banking stable in our country, right? So that we don't have any kind of a bank failure and all those things. Now reduction in CRR. So CRR stands for cash reserve ratio, and during 1992 the CRR was 15%. What is cash reserve ratio? It is the amount, the total liquidity, the total of the net demand and time liability, NDTL, net demand and time liability. What is demand liability? Demand liability means your savings account, because when you put money in the savings account, you can go and demand that money from the bank at any point of time. That's called demand liability. And what is time liability? Your fixed deposits, which is also called as term deposits, because that is also a liability for the bank, but the bank does not have to pay it immediately. There is a time for which the money gets locked, so that is called as time liability. The total deposit, the net demand and time liability, 15% of the NDTL, the bank have to keep with RBI. The CRR, cash reserve ratio, is the total of the cash or the liquidity of the bank, or the total of the NDTL of the bank, that the banks have to maintain with RBI at all points of time. This amount banks cannot use. So what was the percentage earlier? 15%, correct? Now how much it is? It is 4%. It's been maintained from a long time now, last 5, 6 years, 7 years, you can see it is maintained at 4%. Now you see almost 40% is the SLR and 15% was the CRR. That means more than 50% of the total money you cannot use, the banks cannot use. So what loans will they give, right? How will the bank grow? How will banks make profit? How will industry grow? That was one of the major problems which the Narsimham Committee Report 1 highlighted, and based on the recommendation of Narsimham Committee, the rates were gradually reduced year by year, and today we see that SLR has become 19.5% and CRR is 4%. Deregulation of benchmark prime lending rate. So BPLR, the benchmark prime lending rate, was the minimum rate below which the banks could not give loans to anyone. This was deregularized, but it only recently, 2010, 8 years before, and this was replaced by base rate. Base rate is also the minimum rate below which banks cannot give loan. There are some differences between BPLR and base rate that we will discuss in other advanced classes of banking industry. Clear? So one question is that when did base rate come into existence? In the year 2010. Who calculates base rate? The banks themselves calculate base rate under the guidance and instructions of RBI. And what happened? Greater autonomy to banks were given. So these are the main 4 things that happened that was the impact of banking. Now we will see some more things, that what was the impact. So private banks came into existence after this reform started. Private banks, because government reduced the regulatory guidelines and difficulties in opening private banks, and new age private banks such as ICICI Bank, HDFC Bank, Centurion Bank, IndusLand Bank, UTI Bank and GTB Global Trust Bank were founded in 1993 and 94. So all of these major banks that we see today, majorly we talk about ICICI, HDFC and Axis Bank. So UTI Bank later became Axis Bank, so you can consider that UTI is nothing but Axis. So ICICI Bank, HDFC Bank and UTI, these are major banks, private banks that we see today in India, all started during this phase, 93, 94. Foreign direct investment was allowed in banking to some percentage, which gradually increased, and foreign banks were also setting up their branches in our country. All of these things were impact of the reforms, and the reforms based on the report of Narsimham Committee 1. Some points that we must note here: UTI Bank, which started in this 93-94, became Axis Bank on which date? 30th July 2007. Second important note is Centurion Bank merged with Bank of Punjab in which year? 2005, and was later acquired by HDFC in 2008. and that is another GK question for you. And Global Trust Bank GTB was acquired by Oriental Bank of Commerce on 14th August 2004. All of these things happened based on the report of Narsimham Committee 2. Narsimham Committee 1 report came in 91-92, then Narsimham Committee 2 report came in 1998, and these mergers and acquisitions happened based on the recommendation of Narsimham Committee report. So if you are looking at post liberalization phase, liberalization के बाद क्या हुआ बैंकिंग इंडस्ट्री में, उसके पीछे ट्रिगर्स क्या था और उसके पीछे मोटिवेशन क्या था, रिकमेंडेशन क्या था, तो नरसिम्हम कमिटी रिपोर्ट 1 और नरसिम्हम कमिटी रिपोर्ट 2 के बारे में आपको जरूर जान लीजिए. Find out more about these two reports, Narsimham Committee 1 and Narsimham Committee 2 report. We are discussing here in short and brief all the key points. Let's look at this second report, Narsimham Committee Report 2, 1998. What were the suggestions of the report? So if you look at the suggestions, first was again greater focus on autonomy of banks, reforming the role of RBI. See, RBI had NABARD and NHB and SBI, all of these were owned by RBI. RBI was a shareholder of SBI, and this Narsimham Committee saw that there was a conflict of interest between Reserve Bank of India being the central bank of our country and also the owner of commercial banks. Clear? Definitely there will be a conflict of interest. So the strong recommendation of this committee was that RBI should give up all its shareholding in these National Housing Bank, NABARD, State Bank of India. Clear? Stronger banking system, introduction of capital adequacy norms, understanding Basel Committee, also reduction of non-performing assets, capital adequacy and tightening of provision norms, which introduced the concept of CAR, capital adequacy ratio, and CRAR, capital to risk capital. Two things are there. CAR is also known as CRAR, capital to risk weighted assets ratio. CRAR, one second. One is capital adequacy ratio, CAR, capital adequacy ratio, and capital to risk weighted assets ratio. All of these came through this capital adequacy and tightening norms and more entry of foreign banks. These were the suggestions of the report. Now, what was the impact of the report? First of all, introduction of LAF, Liquidity Adjustment Facility. When we discuss RBI rates and ratios, we will see about this more. Liquidity adjustment ratio basically means a provision through which RBI controls the amount of liquidity in the market. Mainly the RBI does it through the repo rate and reverse repo rate. How do they work? We will be discussing those things in detail when we discuss RBI functions and policies. Introduction of Liquidity Adjustment Facility. RBI decided to transfer its respective shareholdings of public banks like SBI, NHB and NABARD to Government of India. Subsequently in 2007, Government of India decided to acquire entire stake of RBI and SBI, NHB and NABARD. Government has already acquired the RBI's entire shares in State Bank of India and NABARD, but not in NHB. It is still in progress. So this was the impact of the report. Next, see impact number 3, mergers and acquisition of banks happened. So we have already seen how different banks merged with each other, and the merger and acquisition of banks happened because of the recommendation of this report. The enactment of the SARFAESI Act, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, very long abbreviation. Please learn about SARFAESI full form. It can come in exams. And also in which year it happened, in which year it was enacted, in the year 2008. What did it do? It allows auction of residential or commercial properties to recover loans. Before this act, banks were not allowed to auction the property. Suppose if I have taken a loan to buy a home, and if I fail to pay the loan, the banks can recover the money that it has given to me by auctioning my home. Clear? But before the SARFAESI Act, the banks could not auction the flat, or the residential property or commercial properties on the basis of which loan was taken. A long process of law was required to go through this auctioning, but this act made it possible for banks to auction the residential or commercial properties that the bank has to recover its loans. The first Asset Reconstruction Company of India, ARC, was also established, right? Also you can see increase in capital adequacy ratio that happened because of the impact of this report. Introduction of the concept of universal bank also came because of Narsimham Committee 2 report. What is a universal bank? Because you see here, you should know this GK question. ICICI became the first universal bank of India. What is a universal bank? A universal bank is which provides all banking services under one roof. So it's not just deposits and loans, it's also insurance, it's also home loans, car loans, gold loans, all of these are banking services, banking products. So one bank providing all of these in under one roof is called a universal bank. Also you can say RBI gave new licenses for private banks. Kotak Mahindra Bank established 2003, Yes Bank established 2004 and IDFC Bank and Bandhan Bank established in 2015. So more private banks started in our country because of the recommendation of Narsimham Committee 2 report. You can see all of these are very important concepts that one should know if one wants to understand how banking in India came to the point that it is today. Right, from where did we start, what all happened, what was the impact from right from pre-independence age to what happened after independence, what is the meaning of nationalization of banks, what was the triggers behind that, and what happened in the phase of liberalization, right, and the two important reports, Narsimham Committee report 1 and 2. So with this we have covered the history of banking in India, all phases I have covered. First we had covered pre-independence phase 1770 to 1945, then post-independence pre-nationalization phase 1947 to 1969, then we have covered today nationalization phase 1969 to 1980 and post-liberalization phase 1991 till date. So all of these phases, all the major things that happened in the banking industry I have covered for you systematically in 2 sessions of banking. Clear? Now next when we start the banking classes on banking awareness, we'll start with RBI's function, types of banks, a lot of more things, important things that are there to discuss for you to be completely prepared for your examination. The mains examination for PO, in the GK part at least 15 to 18 questions you can expect from banking industry. So now is the time for the CPP. Those who have passport access can start solving CPP questions based on Banking of India history of banking in India 2, 10 questions are there, and you can go through all the questions to understand how questions from this topic can come from in the examination. Best of luck to you and best of luck for your exam. Thank you for watching the video.